The first ever transaction where somebody was purchasing a good or service with Bitcoin happened May 22nd of 2010. And what's pretty funny about it is they used 10,000 Bitcoin at the time to buy 2 pizzas from Papa John's and pay somebody to deliver it. So that person received 10,000 Bitcoins. Now take this, Dean. So if we had those 10,000 Bitcoins in 2015, so if that transaction, same amount of Bitcoins were given for those 2 pieces of pizza or 2 whole piece or pizzas, in 2015, that would have been a value of 2.4 million.
How many pizzas can I buy with 2.4 million? I thought that's where you were going here.
No.
I'm going to feed the world with my Bitcoin.
Not at all.
You could.
And on the last anniversary, or the 11th anniversary, that same transaction would have been at a value of 630 million.
Starting your route to retirement.
Hello, everybody. I'm Dean Barber, founder and CEO of Barber Financial Group. Welcome to the Guided Retirement Show. This is the season finale for season 5. I want to thank all of you who have taken the time to listen and subscribe to the Guided Retirement Show and share with your friends. Our next episode, season 6, will be coming out in January of 2022. As a quick reminder, this podcast was actually released early as part of the Barber Financial Group Educational Series. I want you to get enrolled in the Barber Financial Group Educational Series. Every other Wednesday, we have an educational video designed to help you become more intelligent and informed investors. Sign up for the Barber Financial Group Educational Series. Today, we're going to be talking about Bitcoin. I have Matt Kasper and Will Doty, both certified financial planners here at Barber Financial Group, and we're going to cover the basics of Bitcoin today. We're not going to dive really deep into the weeds, but we're going to cover some interesting facts about the origin of Bitcoin, about what Bitcoin really is, and about how you can actually participate in the investment of Bitcoin. Please enjoy my conversation with Will Doty and Matt Kasper, both certified financial planners at Barber Financial Group. Matt Kasper, certified financial planner. Will Doty, certified financial planner. Gentlemen, welcome to the Guided Retirement Show.
Thank you.
Thanks.
All right, so we can take a deep dive later, but today what we want to do is an introduction to Bitcoin. And to set the stage for you guys, Bitcoin has become very mainstream, and there's almost not a day that goes by that you don't hear Bitcoin multiple times. You see the ads for Bitcoin, and you got this cute little coin with a B on it. And I think there's people out there that think that there are actually coins that they can get, and then those are Bitcoins. But that's not really what it is. So I want to back up, and Will, I'll start with you.
Sure.
And again, this is an introduction to Bitcoin. So we could take this down many, many rabbit holes and get people really, really confused, but let's try to keep this pretty high level.
Yeah.
So first of all, what is Bitcoin?
So Bitcoin is essentially, it's just a ledger, but it's done digitally. And talks around this subject. Matt and I were talking earlier, and he put it in a perfect phrase that it's a ledger, just like you're doing your checkbook, right? So it's just a list of transactions that center around, for Bitcoin, it's transferring money from one place to another.
From individual to individual, individual to business, business to business, all of the such, government to government. How is this done? Matt?
Yeah. So ultimately, there's some key language to understand. This is what we would define as peer-to-peer. And what that means is it's potentially me transacting, a pass-through of money over to you, Dean, for example. That is ultimately what's being accomplished with these digital assets. So it's no longer utilizing an institution to be able to accomplish something to that degree. So you have to go back and think, why did this all start in the first place?
Good question.
And it really all started because of the frustration and the craziness that happened with 2008. As we all remember, as we were being financial advisors back in those days, watching how wild and crazy these markets were, but we saw some of these incredible institutions just fail. Dean, I'm sure you have multiple stories about whether it's Bear Stearns or going in and seeing even things, Goldman Sachs being bailed out. There were a lot of these examples back in 2008. One of the most concerning ones was when the dollar, we broke the buck. What happened? Well, people lost faith. They lost trust in what was going on. And what happened was, out of that, Satoshi Nakamoto, who is the developer of Bitcoin, wrote a paper. And this paper came out in 2008. You can actually go look it up and read through this long document that he created. But what came out of that was a system utilizing technology where we no longer needed to incorporate the institution. It was what we would define as being decentralized. Think about a Bank of America. You think about a UMB. Ultimately, they're all connected to a centralized banking system. That's what we call the Fed. And here, for the first time, we developed a system where Satoshi Nakamoto developed a system that was truly peer-to-peer, removing the concern that was coming from these institutions. Bitcoin launched out of what was developed in that white paper in 2009.
Okay, so great explanation. Was that the birth then of the blockchain technology of which Bitcoin is built on?
Yes.
Correct.
Okay, so it was blockchain that was introduced first, then Bitcoin.
Absolutely.
Yes.
Yeah.
Blockchain is the digital ledger.
You got it. So you think about Bitcoin. Bitcoin's the product that relies on a technology like blockchain to even exist.
So let's take this away from currency for just a minute. And I can tell you the way that one person explained it to me, and I'm going to verify it. You guys say, Dean, yes, that's exactly what blockchain is. So they used an example of if you go to your local market and you go buy a fish, and that fish is laying in the freezer there or in the fresh meat section, and they say this is a fresh Atlantic salmon, right? So the blockchain technology, if it were used to track that salmon, you would be able to tell the day and the time that that salmon was caught. You would be able to tell the water temperature. You would be able to tell what time that fish was cleaned, when it was shipped, whether it was frozen when it shipped or whether it shipped fresh, and how long has it actually been out of the water, and what was the price that it cost to catch the fish, what was the price that it cost to clean the fish, what's the total cost of the fish, and what's the market charging for that fish. Is that the kind of transparency that you're talking about with blockchain?
That's a great example.
Absolutely. So when you think about blockchain, there's going to be so many use cases out there. The cryptocurrency is just one example. We actually have completed already where we've had voting systems to do the next election has been completed through a blockchain type of format. So what we're trying to accomplish is what Will was already identifying. This truly is a digital ledger. It's a digital ledger that utilizes cryptography to validate and confirm the transaction. So you wonder where the term cryptocurrency comes from. It's because of the process of actually validating the transactions, and in the case of the election, validating the vote is ultimately being correct and implemented with complete accuracy. And this gets back to, why is this so significant? Why is this technology so revolutionary? Well, ultimately, it's an open platform to where everybody can go and see these different transactions taking place. So it's no longer shut off to say, this is my ledger, this is my book of business. This is ultimately open to the globe.
So one of the things I think that people have probably either heard the podcast or watched the documentary on Silk Road, all right, where a college kid out in San Francisco decides that he wants to go kind of against the grain and he wants to fight the establishment. And so he begins using cryptocurrency as a means for him to sell drugs on the dark web. And he actually winds up having the drugs shipped through the United States Postal Service. Now, that doesn't have anything to do with cryptocurrency, but he used cryptocurrency because the owner of the cryptocurrency remains anonymous. So the transaction remains anonymous so that it cannot be tracked by any government. And that was the reason why he used it. And that I think scares a lot of people that they may think that this whole cryptocurrency world today is fraught with the possibility for fraud.
It's a great question, Dean. I mean, you also have to think just our normal currency and the amount of fraud that goes on around it. No matter what you do, there's always going to be a certain level of fraud. But with how blockchain is created, how it's built, how the transactions flow and are verified by independent people, it actually probably lowers your chance of actual fraud itself.
Okay. All right. So now they talk. Let's go to here. So this we're doing Bitcoin basics here, right? So we understand blockchain now. We understand that it's the tracking of a system. It's a ledger. So how does one acquire a Bitcoin? And is there a finite number of Bitcoins that are out there? And why in the world is the price so volatile? So one at a time.
Okay, yeah, I think the first place to start is that there is capacity. So what I mean by that is there will eventually be 21 million Bitcoins available. Right now, we're only at, 18.6? Is that right?
Correct.
So we're at 18.6 million, which is out in circulation where people can actually participate in that currency. Now,
circulation in the digital world.
Not
the real world, right?
Yep.
It's in the digital world.
Exactly.
Correct.
And when you think about, how does a Bitcoin even exist? Well, once you have a number of these Bitcoins that become available, well, you have to think, if you are there to have transactions confirmed, there's got to be some incentive for you to be going onto the blockchain and ultimately confirming and validating these different transactions. And that's where you hear this word called mining.
Yeah, I picture mining with the old guy with a beard with holes in his jeans, and he's got the gold pen down there, shaking it in the water, trying to find the little bit. That's what I think of mining. Either that, or it's the guys drilling into mountains and finding the giant veins. But this is different.
It's different in one regard, but essentially it's not all that unique from the standpoint of the miners that are successful are the ones that get to the actual gold. So ultimately, you could have one team of miners that are out searching for that gold and come up short, meaning what? They had no reward that came from that mining capability versus another mining team that came up and had the success. So ultimately, when you think about Bitcoin and you're thinking about what blockchain and making sure that these transactions take place, it's all about what team is first. And that's where you hear about these huge mining companies and all these different servers being utilized to be the fastest, to be the first, to be able to capture the incentive. And Will, what was that? So the incentive is what they define as a block reward. And I forget, what's the incentive at this stage?
Yeah. So current stage right now, if you are the miner to win, you're going to receive 6.25 Bitcoins.
So, and you can see at this stage, with the valuation of where Bitcoin is, it's a very competitive market.
Okay, so as we're recording this, Bitcoin is $48,000, so I'm going to get 6.25. So I'm going to get $3,000 for mining that coin. Is that what I'm getting?
No, it'd be closer to 300,000.
Well, you got one Bitcoin is 48,000. If I get 6.25. Am I getting 6.25 coins?
6.25 coins, yeah.
To mine one? That's crazy.
Yeah.
And you wonder why there's so many different mining companies out there.
And so when you talk about being first, you talk about being first. How do one of these miners be better than another? Is it all about the speed of and the power of their computing system?
Exactly.
Yeah, it's all about the computer.
Yep.
And why is it so difficult to mine a Bitcoin?
That is above my pay grade, Dean. I don't know the ins and outs of actually cracking the code.
Have you seen pictures of these miners?
Yes.
Have you?
Yeah, they have some pretty impressive rigs, so to speak.
Do they?
Yes.
Interesting. Okay, so because there are only 21 million of the Bitcoin that can ever be mined, and explain why is that? Why is there only 20? Why is it not an infinite number?
So for one, that's how Satoshi wrote it, as this is what he wanted for Bitcoin. Now, Bitcoin is just one of many different cryptocurrencies, digital assets, however you want to look at it. And some of them do have the what is the word I'm looking for? Unlimited amount of availability. So essentially, Bitcoin is just one structure that is, again, popularized because it was the first. It was kind of revolutionary at the time, but there have become many, many other coins out there that are following different sets of rules, different protocols. And of course, you're just trying to locate from the standpoint what's going to be the best fit for whatever you're trying to complete.
Yeah. So, Will, this is the part that I am confused about, and I'm sure that anybody that's watching us on YouTube or listening to the podcast is probably as confused about as well, because I doubt there are very many people who are actually using Bitcoins to go to the grocery store, to get a haircut, to, buy a vehicle. The price of Bitcoins seems to be a speculative investment where people somehow think that at some point in the future there's going to be some real value to this. Is this going to be much like what we saw the dot-com bubble, where we had all these internet players at the very beginning that were saying this one's going to be the one, this one's going to be the one, and the stock prices were all going through the roof, and then ultimately there was a handful and the rest kind of just go off into the sunset and never to be heard from again?
I think that's a good possibility. I mean, there's hundreds of coins out there now, and everybody's trying to figure out, which one do I own? Do I just own Bitcoin? Do I own Ether and all the others that are out there? And that's where we get a lot of this price fluctuation and speculation.
Because it sounds to me like this technology is really designed to transfer money,
right?
Okay, something of value from one person to the next without the intermediaries. And so who's going to have the most effective technology to do that is who's going to wind up being the ultimate winner.
And I also, so Will, one thing I was going to step back for a second because you were talking about transactions, and there is a date that's kind of celebrated in the Bitcoin universe as being a holiday, and it's called Pizza Day.
Oh yeah.
And Will, why don't you go through what Pizza Day is? Because I think that will help people understand, what was the first transaction.
Yes.
So that's Tuesday nights at my house. Pizza.
So the first ever transaction where somebody was purchasing a good or service with Bitcoin happened May 22nd of 2010. And what's pretty funny about it is they used 10,000 Bitcoin at the time to buy 2 pizzas from Papa John's and pay somebody to deliver it. So that person received 10,000 Bitcoins. Now take this, Dean. So if we had those 10,000 Bitcoins in 2015, so if that transaction, same amount of Bitcoins were given for those 2 pieces of pizza or 2 whole piece or pizzas, in 2015, that would have been a value of $2.4 million.
How many pizzas can I buy with $2.4 million? I thought that's where you were going here.
No.
I'm going to feed the world with my Bitcoin.
Not at all.
Could.
And on the last anniversary, or the 11th anniversary, that same transaction would have been at a value of $630 million.
So if I would have invested in 2 pizzas back in 2010, I could have $630 million.
That's right.
Yeah, it's crazy.
And that seems crazy, but the first Bitcoins were a fraction of a penny. So 10,000 Bitcoins back then really had no value. I mean, it really was the value of
$35, $40, whether it was a Little Caesars $7.99 pizzas, or was it?
All we know is Papa John's.
Okay, Papa John's.
Don't know about the toppings.
That is unbelievable. I didn't know that.
Yeah. Yep.
10,000 Bitcoins for 2 pizzas. So that day is what again?
Pizza Day.
But what is the actual day?
May 22nd.
So May 22nd of every year is Pizza Day.
May 22nd. And that's what Will was just reading. So we just went through the 11th anniversary of that, and that's where they hit those unbelievable levels. Now, of course, Bitcoin has fallen this year as well. So that's one thing you got to be aware of, is what goes up can quickly come down.
Will, you and I, just a couple of weeks ago, we were looking at the volatility of Bitcoin, and there have been many cases where you've seen Bitcoin fall by as much as 98%.
Oh, yeah. Extremely volatile.
Yeah, and that's one of the things where you definitely want to throw out the flag. You want to use caution if you're trying to gain exposure, because while we've seen a lot of success come into this Bitcoin, I mean, exponential growth, it also comes with the fear of how quickly it can retract.
Okay. So now that we understand that blockchain technology is behind the Bitcoin craze and that there are now over 300 different coins out there that are trying to be mined by miners with sophisticated rigs, as Will calls them. Now that we know that, now let's talk about the next competitor in the space, and that is federal governments, not just the United States, but other governments from around the globe that are trying to come up with their own form of digital currency that can be that next way of exchanging dollars or funds.
Yep. So a lot of people don't know this. We've got Russia, China, Japan, and even us in the U.S. We are working on digital currency. Now, this isn't meant to be digital currency to compete with price fluctuations of Bitcoin. It is meant to really actually replace our currency in the way we think of currency. So that you're going to be using your digital dollar to go buy your pizza just as you would the paper dollar today.
But it almost feels like we do that today. I've got the Apple Pay on my phone, and the amount of cash that I carry today is nothing compared to what it was 15 years ago.
Yep.
I walk in and whatever I'm at, I scan my phone and it debits my account. And so are they going to, is this speeding the transaction? Who's going to profit from it? Why is all this happening?
That's a tough question.
Again, is this a new evolution?
Yeah, it's a really good question from the standpoint of it goes against the grain of the original design of Bitcoin, because you're trying to remove the institution. Now you have the Fed, you have the U.S. coming in, working with MIT to ultimately come up with their own stable coin, essentially is what it would be classified as, meaning a dollar is going to be valued at $1. It's not going to have the craziness of the volatility of what goes on with your typical Bitcoin cryptocurrencies and so forth. So like you were just sharing, what makes it unique relative to what we're already experiencing is quite frankly just the question. And I don't have a solid answer for you.
All right. So now you buy Bitcoin and it's placed inside of a digital wallet. Okay. So something that's invisible to you and I and to everybody else, but you can pull that digital wallet up on your computer. You can pull that digital wallet up on your smartphone or your iPad or whatever tablet you're trying to use. And it tells you how many Bitcoins are in that digital wallet. Right.
Yep.
That's correct. There's also something else you want to understand about the wallet. There's two different ways you can go, and this comes down to personal thoughts as far as security on the web. There's a cold wallet and a warm wallet. So a warm wallet is a wallet that is live on somebody else's server that you then access through your phone. You're accessing it through the web, where a cold wallet is actually one that gets downloaded and encrypted to a specific device. So back in the early heydays of Bitcoin, there were a lot of people that were using this so-called cold storage, the cold wallet. And what is being theorized right now is they think out of the 18 plus million that are in circulation, there's 4 million that are actually lost because people can't remember their passwords to get back into these devices. But it's a way that you can take your wallet off the web. Because
I heard of somebody searching through old servers, trying to figure out old what do you call it, the memory cards or things in your computer, saying, I know that I had Bitcoin on one of these, but how do I get back into it? How do I find it? And once a Bitcoin is mined, that's it. You can't go back and redo that one because it got lost. You can't reprint a new one.
Right.
Nope.
Right. Yep. Yeah, you have to wait for the next release of the eventual 21 million Bitcoins that will become into circulation. But again, that one wasn't coming out. What was the deadline for the full 21 million to come out?
I believe it was 2041.
2041. So,
well, at the pace they're going, it's going to happen a lot faster than that, obviously, right? Or is it becoming more and more difficult to mine the coin because of the way the technology is?
Well, it's actually it's part of Bitcoin's policy. So it's already determined when they're going to have the release dates and how many are going to be released. So it's not going to be up to the popularity of it. It's going to be simply what did Satoshi define inside of his process.
Okay, all right.
And one fun question to also ask is, who is Satoshi? And that's kind of wild as well, because nobody knows who Satoshi Nakamoto is.
Really?
Whether it's a group of people or one guy, nobody is coming forward and laying claim to being Satoshi.
Interesting. That's fascinating. Well, I did not know that either. I just thought he was from Japan.
They're pretty sure the group or person is from Japan, but they do not know if there's an actual Satoshi that.
Interesting. Well, okay, so let's go back to what I think a lot of people want to know is, should I invest in Bitcoin? And if I invest in Bitcoin, what's the smartest way to do it? So first off, Matt, should people be buying Bitcoin as a long-term investment, or should they be using it as short-term speculation?
Well, when you think about participating in something like a digital asset, one, go into it being fully aware of how much volatility is really incorporated inside of this new asset class. Because essentially, don't go in thinking that you're just going to have this incredible growth that we've experienced historically, because you never have control over what sequence of time you're going to experience inside of these type of investments. So I think, yes, you need to have your eyes open. You need to be aware of what some of these opportunities look like. But how you participate, meaning how do you invest in it specifically, is one, you need to spend some serious time to determine what are the risk factor, what are the trade-offs, whether I'm owning the currency outright or I'm owning an investment that is seeking the return of what these different currencies are entailing. And of course, there's security questions. There's so many questions that go into how should I invest in this? And then once you determine how you want to invest, the next question is how much?
Right. So do you own Bitcoin, Matt?
I do.
And Will, do you own Bitcoin?
I do.
Okay. And then do you own the Bitcoin direct, or are you participating in investments like ETFs or mutual funds that are trying to mirror like a group of the coins and they're more diversified?
Right now, I'm currently in funds.
Okay.
I do have a wallet. I have not invested in the wallet yet.
Okay.
Because again, even though I'm young, I'm still getting used to the whole idea.
Yeah.
I did it both ways just to gain experience. But of course, the question is, it almost feels like play money to me. You have your YOLO account, you only live once. And essentially, that's where you have some of the speculation structured inside of this. And I wanted to have an experience on both sides, so that's why I went that direction.
I thought you were going to tell me that you were putting your child's college fund in there.
Well, there's one way to get there faster. That's right. If you start too late.
Facetious, of course, correct?
That's correct.
So I too own some Bitcoin. I've done both. I've bought in the wallet and I currently own in an ETF. Well, one of the things that you and I were looking at here, which I think is something that we're exploring and doing more due diligence on and really trying to gain some better understanding, is there is a company out there today that is they're creating a Bitcoin mutual fund that's designed to capture roughly 60 to 70% of the upward trend of Bitcoin, yet only capture 40 to 50% of the downward trend of Bitcoin. So if you can do that and you're capturing more of the up than you are of the down, then ultimately you wind up with a winning investment over time. So to me, that's a concept that's interesting because I don't know of any other way to hedge an investment in Bitcoin.
Yeah, no, that's exactly right. And it's really fascinating. They're doing this all through futures as opposed to actually owning the asset. So it's a whole different way of thinking and investing and being able to get into that space, get some exposure. But again, hopefully, you're not taking the worst down times, which, we've seen it sell off over 90%. So, you just have to look again, like what Matt said, you got to be okay and comfortable and understand these dynamics if you're wanting to get into this place.
And you also, taking it a different direction from an investment perspective, this might sound crazy, but there are scenarios where owning a digital asset can lower your portfolio risk. And the reason why that could be true is because when you look at something like Bitcoin is not highly correlated to the stock market or the bond market. So you get a unique return pattern that comes from a Bitcoin type of investment. And if you look at, how do I structure this inside of a portfolio? Well, let's not get crazy with an investment like this. This is where you own potentially 1 to 2%. And if you look at 1 to 2% inside of a Bitcoin and you build it with the other stocks and bonds and real estate that you're structuring inside of your diversified portfolio, it may surprise you that ultimately it's not adding or contributing to additional risk respectfully. Not to say if you own it outright individually, yes, that volatility is incredible. But if you have it in a well-diversified portfolio, you can position it to actually reduce risk in certain cases.
Interesting. Guys, we've got 27 minutes of Bitcoin basics here for our listeners, and I'm not sure if people are smarter after listening to this or if they're more confused. The whole concept of mining the Bitcoin is still something that I need to understand better of how it works. The whole concept of blockchain technology, and we live in this world, and I think we all grew up in a visual world, right, where we can see it, we can touch it, we can feel it. This is something that's real.
Yep.
And it may be this Bitcoin may be as foreign to people like us as the day that our grandparents or great-grandparents didn't have to hold the physical stock certificate to say, I've got this money. Right. And the day that it was held inside this brokerage account somewhere, they're like, oh my gosh, where's my money? Right? We used to own the stock. It's just all held at a brokerage company. Well, who is this brokerage company? They're going to steal my stock. And I think that it's going to require a little bit of a change in how we think about things, much in the same way that our parents or grandparents that used to hold the physical stocks, or they used to have the bond where they'd literally clip the coupon, send it in, and they'd get check, right?
Yep.
Right.
So it's a different world. It's a digital world. We're moving more and more towards that. So we're going to come together. We're going to provide additional information in the next season of the Guided Retirement Show, a more in-depth dive of Bitcoin. And of course, as always, if anybody listening to this or watching this on YouTube wants to have a conversation with either one of you two or any of our other certified financial planners, more than happy to talk to you about how Bitcoin might play a part in the overall financial plan.
Yeah, definitely.
Correct. Absolutely. And I don't think you want to overwhelm yourself with, the complexity of this. This is technology that is ultimately highly innovative, and you're just trying to see, does it fit in my overall story as far as either an investment or just trying to, quite frankly, just figure out how it fits into our life and our role.
I just want to know if those two guys that bought the pizzas, what was that, 11 years ago? Are kicking themselves for spending 10,000 Bitcoins on two pizzas that would now be, what'd you say, Will, $630 million?
Yeah, roughly.
Or the $4 million that's been lost.
Yeah, I've heard of losing your wallet before, but that's crazy.
It's an expensive wallet.
Yeah. Well, guys, thanks for taking the time to give us a brief education on Bitcoin, what it is, how it works, and we'll dive deeper in the next season.
Sounds good.
Sounds perfect.
Thanks.
Thank you.
All right, everybody, that's a wrap for Season 5 of the Guided Retirement Show. Once again, a big thanks to all of our listeners out there, those of you that have already subscribed, those of you that have been sharing this with your friends and relatives. Please continue to do so. We gain more and more listeners every single day, and I know we're making an impact from the feedback that we get from you. As a quick reminder, get to a link in the show notes where you can subscribe to the Barber Financial Group educational series, where every other Wednesday we come out with a video of things that you need to know to become more intelligent and informed investors. And through that link as well, you'll be able to request a complimentary consultation with one of our certified financial planners. Thanks for listening.
Starting your route to retirement.
Investment advisory services offered through Barber Financial Group, an SEC-registered investment advisor.